Got to tell the truth.
What's that, 2 hours question?
I know. This is our primary source of revenue. So we may,
Go ahead, please. Thank you.
Okay, Mr. Chairman, Commissioners, thank you all. And I'm going to give you a quick overview here of the tax department, a year take you on a high-level look at a year in the life of the tax department. We'll review we'll review deadlines and requirements for listing and collecting taxes. And most of our deadlines and programs are mandated by state law. The large majority of what we do is mandated by state. Okay, who we are, our department's made up of several sections. We've got personal property, individual personal property, business personal property, real property, appraisal, mapping, and collection. We currently have 17 full-time and 1 part-time employee. In the tax department, our annual budget is a little over $1.6 million. Excuse me. Excuse me. What we do, we sort of in a nutshell here, we list, assess, bill, and collect all real and personal and motor vehicle tax for Wayne County. We currently collect annual taxes for 6 of our 7 municipalities. Those 6 are Goldsboro, Fremont, Mount Olive, Eureka, Seven Springs, and Pikeville. We collect registered motor vehicles for vehicle taxes for all 7 of our Wayne County municipalities, and that's required by statute. We also issue beer and wine license, collect drainage assessments, and also vehicle gross receipts. Those are daily rental vehicles, rental cars. Also, what we do, we process warranty, trustees, and quitclaim deeds. We map all new subdivisions and land splits. Property is also transferred by wills or estate files. All new construction, subdivisions, and splits are valued by our appraisal section. We're responsible for measuring and listing all new houses, additions, commercial buildings for the county and all the municipalities. We cover the entire county. Last countywide revaluation was completed, went into effect January 1, 2011. Our department strives to be fair and equitable while delivering excellent customer service. We try to achieve a 97% plus collection rate on annual bills by the end of each fiscal year. Our goal is to have trained professional employees, current in tax laws and regulations regarding the property taxation. We continue to send our employees to training to keep up with ever-changing laws and also for them to maintain state and association certifications. We have quite a few folks that are certified. General information, we're approaching 65,000 parcels of real estate. The 12-13 tax levy for real and personal property was approximately $7.1 billion in value. That equates to approximately $50 million in county property tax. We bill roughly 110,000 vehicles with a value of approximately $820 million or approximately $5.7 million in tax dollars. January 1 is a snapshot date of which value, ownership, and status of real and personal property are determined for tax purposes. January 1 also begins the listing period for all personal property and real property improvements. Personal property and business abstracts are mailed to taxpayers who listed the previous year, if you listed anything with us previous year. January 5 is the last day to pay the previous year's taxes without interest. That's the deadline to pay the annual taxes. January 6, interest automatically starts. Delinquent letters are mailed mid to late January on any delinquent accounts. All delinquent accounts are subject to enforced collection remedies after the 5th. Garnishments, we research employment status and send notification of wage levy to the employer and the employee. Bank attachments, we can seize funds in bank accounts for delinquent taxes. Rent levy, we can attach rent payments from tenants for delinquent taxes owed on landlord's property.
David, before you turn the page back up to the top, general information, $820 million, or it's not 5.7, it's 50 million. You've got 5.7 on my sheet here.
Yes.
That's for vehicles.
That's a vehicle.
Is that correct then? 5.7 million?
That would be for the vehicles, yes.
Where did I pull the 50 million?
50
from?
is a paragraph right above that. That's real and personal property.
Thank you. Just for written information down. I'm trying to read in this too. Thank you.
Okay. January 31 ends the listing period. Any property not listed timely is subject to a 10% late list penalty. This is also the last day to apply timely for exemption and exclusion or use value. Prepayments for 2013 real estate taxes may be made anytime prior to our billing. We do accept prepayments on that. Wayne County employees may enroll in the voluntary employee deduction program. That's only on annual bills. It does not include vehicles. Debt set-off. March 5, 60 days after the accounts become delinquent, accounts are subject to withholding of state income tax or lottery winnings. For the 11-12 fiscal year, we received a little over $154,000 from the state of North Carolina for delinquent taxes, delinquent accounts. Debt set-off letters usually generate some payments of delinquent accounts in our office. When we send those letters out, it usually generates some activity and some payments. Okay, March, May, we must run 3 required notices concerning the Board of Equalization and Reviews, convening and adjournment dates. In our county, y'all, the Board of Commissioners, sit as the Board of Equalization and Review. The Board of Commissioners can appoint a separate Board of Equalization and Review if they so choose. All real estate transfers and new construction, land pricing must be completed and new notices mailed. Tax collector must advertise delinquent accounts at least once between March 1 and June 30th. June 1st is the last day to apply timely for the elderly and disabled homestead exclusion and veterans exclusion. And hopefully by June 30th, the tax rates are normally set by y'all and the municipalities, boards of the municipalities. Usually in July, normally in August, the tax bills are mailed, the annual tax bills. All property taxes, real and personal, excluding registered motor vehicles, are due September 1, but are not delinquent until after January 5 of the following year. Mortgage company files are also generated and sent. We receive payments from mortgage companies. Hopefully, we request them to have them in by November 15th. September to December, we send transfer letters, which is mail notification to new owners of taxes due on real estate they acquired after January 1 of the current year. Mortgage company payments, again, come in. We receive and process the payment files, and again, we request these files be submitted by November 15th. End of the year processing, final billing, bill discoveries, any unbilled, unlisted abstracts. We also receive watercraft information from the North Carolina Wildlife Resources Commission. We create the upcoming year's abstracts. We load our depreciation schedules for business personal property. We also load valuation tables for mobile homes. Public service companies. Companies such as Progress Energy, Bell South, railroads, bus lines. They're examples of public service companies. The value for these companies are certified and received from the North Carolina Department of Revenue. Total value billed for these companies for 2012 was a little over $641 million, which equates to about $4.5 million in county taxes. Registered motor vehicles. We receive a file each month, usually by the 5th of the month, from DMV with renewed tax for Wayne County for a given month. Out of 8,000 to 10,000 vehicles each month, we have about 10% that have to be reviewed due to bad addresses, exceptions, value issues, those type things. And we also have, starting in July, the new tag and tax system, which y'all probably heard something about. It'll be effective July 1, 2013. We will still handle all processing, valuing, and situsing of the vehicles. DMV will collect tag fee and taxes at the same time. Tax dollars will be sent back to the counties, and the county will distribute those to the municipalities and fire districts as we do now. Senior citizens / disability exemption. You can make a timely application January 1 to June 1. You must be 65 or totally and permanently disabled. Have an income for the preceding calendar year of not more than $28,100. This includes both incomes if it's married. if they're a married couple, and you must be a North Carolina resident. If qualified, the exemption would exclude from property taxes the greater of $25,000 or 50% of the appraised value of the permanent residence owned and occupied by a qualifying owner. We currently have approximately a little over 2,000 taxpayers qualifying for the program, which equates, with 76.2 million value exempted, which equates to over $500,000 in county tax dollars. Farm use/deferred program. We currently have approximately 5,197 parcels with a deferred value of $465.1 million or $3.2 million roughly county tax dollars in the program. Certain qualifications such as number of acres, income, length of ownership must be met to qualify for this program. When a parcel of land becomes ineligible, changes hands, or the use of the property changes, a rollback occurs for the current year and the previous 3 years on the deferred amount. As far as legislative issues, House Bill 30 it was introduced earlier this year to repeal the combined tax and tag system. Based on information that we're getting, we don't think that has much legs to it. We try to avoid continued erosion of the tax base through exemptions for nonprofits, things like this. We get a lot of those, and I think we think we need to be careful in allowing that. Also, there's potential acceleration of the revaluation. Right now, you can go 8 years for revaluation, which we traditionally have done. They're looking at possibly shortening that to 4 years or 6 years, potentially.
I thought that had already been done. Okay. Sir?
Authority to do it more, but you don't have to do it more.
Yeah, it's the option. We have the authority to do so.
Yes, you do have the authority to do that, yes.
Yes, that's what I was asking.
I'm
Okay, I'm sorry.
misunderstood your question. And, Alan, do you have anything to add? What questions?
Questions?
Yeah.
Commissioners? Yes, sir, Mr. Daugherty, and then Mr. Bell.
David, do we charge the municipalities and cities for handling their taxes?
Yes, sir, we
Okay.
do. We do.
So we do. So if all the monies are coming to us and we're having to distribute it back out to them, we actually do charge them for that.
Currently, we do retain the percentage we charge for collecting taxes. We currently do that. Now, with the new tag and tax system, the state, even though the money's going to come back to us and we're going to distribute it, there won't be any charge to the municipalities when that starts.
Why?
Well, because the state is actually collecting the monies. We're still doing the siticing, exceptions, handling that. But when the law was proposed and put into place, they took that piece out of it.
Over here, you had mentioned that on garnishments, that you research employment status and
Yes, sir.
send notification for wage and levy. How do you research the employment status?
We actually get lists, which according to statutes, governments and companies are required to give us. We'll review those lists against our delinquent accounts and see if we find a match. And if we do, we then can issue a garnishment to that person to garnish their wages for the taxes they owe us.
What type of reports are you getting from North Carolina departments?
We just get a report, a list of employees, their name, et cetera, that we can match back to. We get a list from the county, we get a list from the municipalities, we get a list from the state, we get a list from the school board, we get lists from businesses, industries, those type things.
You get that through the unemployment?
Actually, no, we get it directly from, in our case, we get it directly from county.
Yeah, but for a private company, how would you know someone worked at a private
Well,
company?
they actually are required to give us those lists when we request them also.
All right. But you're not getting any list from, Bill, I'm going to refer to, Bill, what do they call that now? Not the Employment Security Commission.
Workforce Solutions.
Workforce Solutions.
No. we're not
Because, every employer must file that once a quarter. But you're not getting that from there.
No.
Have you considered
We have
that?
access to their system.
Yes.
You do have access
We
to
can
it?
verify through their system, yes, sir.
Okay,
Yes, sir.
all right, good.
For
good, good.
verification.
And you were saying that you must advertise delinquent accounts at least once between March 1st and June 30th.
Right.
Is that prescribed by law?
Yes. As in
And
statutes.
does it prescribe where you need to advertise there?
Well, it basically states in a newspaper, and sometimes these things are a little antiquated, but in a newspaper with general circulation throughout the county.
Okay. And just a moment here now. These special exemptions that is allowed in Wayne County, I take that's allowed across the state.
Statewide, yes.
So senior citizens and veterans?
Yep.
So veterans has a separate one? If you're a senior citizen and a veteran, do you get both?
No, you can apply for any of them that you might qualify for. You could potentially qualify for more than one, but you can only receive one.
Okay. Thank you, Mr. Chairman.
Mr. Bell?
Didn't you tell us one time, a few years ago, that it was more expensive to go 4 years than 8?
Well, in our opinion, when I say ours, tax department, I don't know that I can justify what it costs to do a revaluation for any benefit we might see or receive from going to a 4-year reval as opposed to an 8-year reval.
Okay.
Mr. Bill,
Mr.
most of the counties that have gone to.
Yeah, you need to go.
Mr. Bill, most of the counties that have gone to a 4-year are your larger counties that see a more faster growth, and they usually have a whole reval staff. That's all they do is reval continually.
Oh,
They have a
okay.
whole separate staff that does reval.
And they hire a permanent staff, and like Al said, they pretty much do that. That's what they do the whole time.
So what are you saying, that you think we are okay at the rate we go right now, or?
Well, I think we're okay in my opinion, the 8-year cycle works for us. As I say, it's potential that the state may come back and say, and want everybody to shorten it up some, shorter than the 8 years. That's potential.
Mr. Aycock, then Mr. Cromartie.
Yes, sir.
David, you stated that the DMV is going to, and we've already got notice of collecting the tag fee and the taxes.
Yes, sir.
The state doesn't work for nothing. What is that costing the county for them to collect that taxes?
Right now, I think it is going to be like 1.69% or 1.69 cent, excuse me, $1.69 per vehicle. Per transaction is what it is. Which, when we did, I know they had all the counties do the math, so to speak, and that's actually less than what it's costing us now for processing, mailing, everything.
That was my next question.
Yeah.
Okay, thank you.
Mr. Cromartie.
What
Mr. Martin.
benefit, what benefit is it to our citizens to go from 8 years to 4 years?
Well, I don't know that there would be any benefit. Some folks, some counties that have gone to a 4-year, as Alan said, they hire their own in-house staff, and they're pretty much that staff's doing reval all the time. Their other staff are picking up new construction, et cetera. Some of them feel like it's equalizes the values sooner so now we're on an 8-year cycle. So for instance, the last one, our 2003 revaluation went into effect. Once we put those values in place, if you didn't make any changes, any additions, tear anything in, didn't do anything at all, you paid on that same value up until we had our 2011 revaluation. Now, the tax rates can change because y'all set those each year, so do the municipalities, those type of things. So the rates can change. But that 8-year cycle seems to have worked pretty well for us. And as Alan said, some of your larger counties, more urbanized counties, seem to find that going to a 4-year and putting on staff just works better for them.
But for our individual citizens, that's only going to mean they're going to pay more money, right?
Well, they would be paying more value sooner.
No, I'm more value sooner means that individual citizen has to pay more money sooner.
Potentially, yes,
All
sir. Potentially.
Mr. Mayor.
Yes, if we went on a 4-year reevaluation, the largest advantage I see, it will be less of a sticker shock to our taxpayers.
Yes, sir.
Rather than having like a 17% like I think our average last reval was, it would be divided up into finer increments, and it would be an advantage to the taxpayer. The second thing I wanted to mention is that all this information here on these deadlines and things like that, how is this available to the public?
Okay, well, as far as the listing periods, things like that, we do send, if you listed property with us the previous year, we send abstracts. We also get information, just like on boats from the Wildlife Resources Commission, we create and send abstracts on those. We advertise every year, which we're required to do, and in the advertisements, it indicates not only things you're supposed to list, everybody's supposed to list, but also it indicates about the programs where you can apply for the exceptions, exclusions, those type things.
It's as a senior citizen, do I have to apply for the senior citizen exemption?
Well, you don't have to apply, you can, but the question is, can you qualify?
Well, I understand, but you have to apply for all
Yes,
of
sir.
these?
Yes, you have to, yeah, anything like this, whether it be present use value, whether it's for a senior citizen exemption, veteran, you do have to apply and qualify.
Well, you know, the land use value has been a problem ever since I've been a commissioner. And I know that we had talked about having the real estate agents and closing attorneys involved and letting people know that when they purchase a farm that's already under land use value, they have to refile again for that. I hope we can figure out a way to get the word out more efficiently. Yeah.
Well, and we do attempt to do that. Mr. Mayo, a young lady that pretty much handles that in our office, she sends out a letter, includes an application. Anytime, especially if it's in a family situation or when something changes hands, she does attempt to contact the folks to let them know, here's what you have to do. And in fact, I've even, some attorneys that handle real estate transactions, I did have one taxpayer tell me that when they were winding up their transaction, the attorney handed them an application and said, you've got to fill this out and you need to have it by the tax office within a certain amount of time. And the gentleman was honest, he said, I went home, took my stuff, filed it away, and never thought any more about it. So I think we attempt to notify the folks, and I think the attorneys probably are doing the same thing.
Explain real quick, David, if you will, in case people don't know, if you lose your land use value, what is the penalty when you lose it?
What happens if you, for whatever reason, when the property changes hands, if you lose that because change of use, change of hands, whatever it is, the actual, you're paying on a deferred value, a present use value, which is different than the market value normally. That difference is carried forward as deferred taxes. If you lose that ability, you lose your present use value status, then we're required by statute to roll back for the current year and 3 previous years. And we do roll back on the difference in what you were paying at the deferred value, at present use value, and what you would have paid at market value, plus interest for the 3rd year back, 2nd year back, 1st year back, et cetera.
Yeah, people need to understand that can be very expensive.
Yes.
That's why they need to stay current as far as their land use value application. Thank you, Mr. Chairman.
Yes, sir. Yes, sir.
Follow-up question. The cost of reval. Do you recall what the latest reval cost?
I'm trying to think what the total latest cost was. I do not have that figure with me, Mr. Doherty, but I can get it. It's
Just over $500,000.
Well, I think it's more less.
Yeah. It's
probably
actually
have
less than we had predicted, so I mean, they did a good job in keeping that cost down because it has been higher in years prior.
It was less than $500,000?
about
And you budget that annually, anticipating for that,
We're required
or
to do that.
divided by 8 years.
Right.
Okay. So if we go to
Required
4.
spend that, and you have to set the money aside for that purpose.
So when we're working in budgeting, we should be setting aside every year 1/8 of $500,000, or maybe a little more than that.
Whatever we're predicting it might be.
we recommend more because last two revals, we did quite a bit in-house with our folks and with hiring some additional help. We hired folks to help us with the commercial properties, and I think in doing that, the job here, what you want to do is do a good job and get everything as close as you can, which we tried to do. But by doing it that way, we were able to save some money. If you were to hire a revaluation firm, which we'd always done prior to that, I doubt you'd get it done for less than 1.2 to 1.5 million.
If you were hiring it all out.
Yes, yeah, turnkey job.
And my last question, and that is reval. Did it in any way, did you question when you got the revaluation that with the economy as it was, with real estate prices all across the nation devaluing, going down dramatically, did you question the fact of why in Wayne County we were special and had a 17% increase in overall valuation?
Yes, sir. What happened there is our last reval was 2003, went into effect. For 3, 4, 5, 6, 7, and I think in Wayne County, probably even into 08, maybe into 09, prices on real estate were going up, and at some point they were going pretty quickly. It leveled off and then started dropping. We actually lost some percentage from the 2003 to 2011 revaluation in what we had before, and I think that was a result of that. In other words, values went up on those, but they didn't drop back down to 2003 levels when basically the economy went south on us. Because our from 95 to 2003, and these are countywide averages now. You know, you can't pick out a particular property. These are countywide averages. But from 95 to 03, we actually had a countywide average of around 32 to 33% increase in value. And this time was about, like I said, it was approximately, as Mr. Mayor said, somewhere around 16, 17% overall countywide from the 03 to the 2011.
Okay, thank you.
Mr. Mayo.
Yes, David, am I correct also, land values were going up, but your cutoff date for the reval was, am I correct in saying it was January of 2010, as far as your comparisons go?
No, sir. We would have tried to use any sales we had up through the 2010 year. January 1, 2011 is when our revaluation was effective.
Yes.
So any sales prior to that, we try to look at good arm's length transactions, good sales.
Right.
And any of those we would have tried to look at as late in 2010 as we could look at.
Right.
Because, you know, you want to go to the nth hour there, so to speak, to try and look at good sales.
But you could go all the way back to January of 2010?
Yes, sir, yeah. And we tried to stay within those last couple of years, 9 and 10, mostly as much as we could in 10, because again, you want the most recent sales for that snapshot date when it goes into effect.
Yeah, okay, thank you.
Any other questions? Comments? We're going to break for lunch, but I got one quick question before
Yes,
we
sir.
do. Public service companies. We've got interesting Progress Energy with their grand opening or ribbon cutting here shortly. When did we go into, in effect, look at the value of the new plant versus what it was on the old plant cost?
Each year, when these public service companies are required to submit their information to the North Carolina Department of Revenue, the Property Tax Division, they actually submit their information to them. The department certifies it, sends it out to all the counties. So wherever they were in their progress and what they had done at certain points, and again, your January 1 date's the snapshot date, that's what we've picked up. So we've picked up substantial value on the new Progress Energy plant. We will, I think, pick up some more. Now, what that is actually, how much that's going to amount to, you just don't know right now.
Economics, commerce showed somewhere between 350, 380 million is what it was, which would move up to about a $900 million facility once it was all completed. do we get tax base off of that when it's on the ground? Or, I know you said you break it up, but where are we? Because it'd be interesting to know that you got 641 million, and of that 641 million, what is actually that of Progress Energy? And then you've got, equates to 4,504,000. But depends on the percentage of that 541 million. If you pick up another 200 million, 300 million, that equates significantly higher than the 4,504,000.
Right.
That would be nice for revenue, looking at that going into the budget year. That's what I was concerned about between now and June 30, is to give some indication of revenue that's going to generate that will offset possibly for a lower tax rate. Oh, excuse me, did I say that? But anyway, I was just looking at that, and
Just a slip of the tongue.
so I was looking at that, David, and just didn't know where we were with that.
Yeah.
If-
Well, we actually do not receive the values for public service. Earliest I've ever received them was August, and a lot of times it's into September. So it's sort of an unknown until you get that.
Yes.
Now, yeah, we will pick up some additional value and revenue. How much? I wouldn't
Yeah.
even want to guess at, simply because I know you're reading the paper, well, they're spending $900 million. Well, don't expect to take $900 million and multiply it by the tax rate, because you can't do that. I mean, it's,
What page are you reading from? Excuse me.
No, I'm not reading from
I
the
better
paper.
hush. It's lunchtime.
Yeah.
Thank you, David.
Anyway, okay.
Thank you. It's lunch, and we'll adjourn for lunch and be back here in 15 minutes, please.
15 minutes?
Well, it's, we've got lunch right out here, and it's 1:15.